Hey everybody, what's up? It's Pete Carmasino here, CHAIKIN Analytics for this week's halftime show. Today is September 27th, 2021, and we're going to go over a few different things today. We're going to look at some areas of the fixed income market. We're seeing rates really have a jump up higher, up over 1.5% today. And because of that, we're seeing sort of mixed levels and mixed emotions inside of the markets, the equity markets. And the two are typically anti-correlated, but we're getting a bit of some mixed sentiment here, right? So we can see the small caps are rallying, and we're seeing some of the tech names selling off, and technology is sort of, has some trouble with higher rates. Now, we can't expect rates to stay where they are. And because of that, you're starting to see some signals coming from a lot of major banks, investment banks, and the capital market side of the business, just about what's happening as far as the business cycle. And where are we? Are we late? Are we in the mid cycle? Are we in a recovery? There's a lot of mixed sentiment going on right now. So what we're going to do is we're going to look at some names that have popped up on my radar in the capital markets area, specifically, and some of those have some bank and financial services tied to them, obviously. And then there are two names that are really part of the recovery story, more of the employment level, which are the professional services firms of Robert Half and Korn Ferry, right? They're executive search and hiring firms that help corporations, place executives of all levels down to entry level up to the C-suite as well. So let's take a look and dive into the charts and see what we can see today. Okay, everybody, here you can see a chart of the US 10-year Treasury yield. All right, this is the yield chart. And I had compiled this for our users. As I said, I'm the chief market strategist here at CHAIKIN, and I write the daily note. And in the note, we typically are pointing out a lot of different trends and what's happening in the overall markets, not just equities or stocks in general, but also on the fixed income area. And I had just noticed and had drawn a Fibonacci retracement from the high back in March to the low. And that happened to be a 50% retracement. Okay. And what I did was just pointing out some ideas of sort of a round number target. Is 2% the target here? If we get to this level of 175 and we can surpass it, we're not going to be that far away from the 195, 2% range, that we saw in the beginning of 2020. And so when you've got that set up, you've got to understand, what part of the business cycle we might be in and what areas of the market are going to do well. So typically think financial services, think banking, think energy, right? I mean, look what energy and oil is doing as we speak here today. So keep that in mind. That's why we're starting to see names like, when I say names, more of an ETF, like TLT. I'll save that chart. Starting to roll over. Now, why is this going down? Rates going up? Well, that's the opposite that occurs because when bonds move lower, that really pushes rates higher. Okay. And so we had seen and had called out numerous times that 150, and you can stretch it to 151, had really been an area of resistance in that treasury market. And it certainly held true here. And not only did it hold true, but really did an about face all the way back down to 145 with a MACD crossing on the downside, the RSI confirming that, and really, potentially even seeing the 20-day might even cross the 50 if we get any lower here. So again, we're down only slightly today, but that's really off of a pretty big move already. Okay, so let's keep that in mind. And we'll get to some of the stocks here right away. And the first one I'm going to start with is Jefferies, because we've got a very bullish rating on it. There's our CHAIKIN rating. You can subscribe to it right here. You can find it, and you can find all the plugins down here with a little plug, right? You find CHAIKIN Analytics down here, CHAIKIN Power Gauge. it's $40 a year, not a month, $40 a year. So it's pretty, low entry fee to get the power gauge. And then, from week to week, we're going to be showing you, what the power gauge says and some of the names that are standing out. So let's look at Jefferies. We can see the setup is there. The technical setup is already forming and pushing into the right direction. And if I look at my halftime show, I just wrote AAA up there only because I wanted to keep it at the top of the list. So take a look at what we're doing here, right? I mean, the stock is really hitting its high from August. It's oversold. I've got money flow that's kind of negative here, but that could just be a formation on the chart. It doesn't necessarily mean that money is flowing out of it, especially when we see it moving higher. But really what's more important is that relative strength area. And now we're pushing up and sort of held on that long-term trend, pushing up here. And I'm seeing a power gauge that's really pretty powerful, literally. And I've got sort of a mixed bag here in experts, but most of it is pointing to very bullish. And if you start to look at really the entire category lineup, financials are in the middle. They could be getting better, but I got a low PE. I got a dividend at 2.68. Great little firm out there. And I think this is an interesting one to take a look at. So keep that in mind. Let's look at another one, Morgan Stanley, which is another popular capital markets and financial services name. Again, another very bullish rating. Financials are slightly bearish, but everything else is pointing toward a bullish stance. And I'll tell you, this really is at a breakout level. If 105 can be surpassed with an RSI 14 just around 59 or 60, and the MACD holding the zero line and starting to turn up, I think you've got a lot of great signals there for the future. And then obviously on top of that, what do you have? You've got a very bullish power gauge. So again, putting fundamentals and technicals together, great little setup here, oversold, strong relative strength for months. I mean, obviously this has been going on for a while, but this can continue. You're starting to see what's happening here. Another high yield, 2.7%, low PE. And what are experts saying here? Don't forget, look at this little gadget that we have. You can take a look at earnings per share and you can see that little $1.61 that's saying we're going to get an increase. Well, that meant estimates were increased. And versus a year ago, it's not a massive, large differential. However, they've already upped estimates and, potentially that could lead to a pretty big beat, but who knows? I mean, we're sort of speculating at this point, but again, you've got earnings in October 14th. And you've got pretty much everything set up. You've got the technicals obviously set up. We've been seeing that for months. And then even financials could even get a little bit better. They've got some debt, obviously, a lot of capital markets companies do, but they got the cash flow to cover it. And really the return on equity is doing really well. Okay, let's jump into the next name here really quick. And Moelis Company, another capital markets company. Again, very similar setups on all three of these, with the RSI 14 sitting there at 60, the MACD just starting to turn, holding the zero line. And what else do I have? I got pretty strong financials here as well. So let's just take a look at this very, very quickly. And symbols MC. And what's cool about this, we can take a look. And what are they? They're an investment banking firm, worldwide. They do a nice little business here. I mean, they're doing almost, $1.25 billion in revenue, another 12 PE. Look at this yield on this one, 379. I think this is a really interesting setup. Again, for all of the same reasons that we had talked about, even money flow with a little negativity. Again, I can overlook that only because I've got such strong relative strength here and a very bullish rating. And I feel like I'm in the right sector, for the current environment of the markets here. Okay. So the other two I mentioned were Robert Half, RHI. And again, them from being the executive search firms and hiring firms that are going to help a lot of companies fill positions from multiple locations. Don't forget, work from anywhere is now really a sort of a tailwind for these types of companies because there's less relocation needs and things of that nature now. Some companies may require it, but the point being is it's less of an imperative or an importance than it used to be. So you got Robert Half and Korn Ferry, right? Really the two very similar companies, but the RHI, the Robert Half symbol, is very similar to that capital market setup with, the RSI 14 and around 58, the MACD making the turn. We are really holding those, those support levels that were moving averages. And if we go to the CHAIKIN chart here, if we look at RHI, a very, very similar setup, right? What do I have? I've got a strong trend, a stock in a strong industry. I've got a bit of negative money flow. Again, I can overlook it. And the only reason that I can overlook that is because I've got this massive relative strength here that's really pushing and really dictating the direction, of this stock. And if I go to experts, what am I seeing? All good things, right? And if I take a look really at Korn Ferry really quick, KFY, I have a similar setup here. All right. I had a little breakdown in relative strength, and I think that's something that you need to be aware of. But it's a smaller company, a better looking PE, much lower yield, a strong relative strength that has been getting better. So this one might be a little bit more of an aggressive play, but I think you still have an opportunity here. If you can hold the $70 to $75 range and move higher, you've got experts looking pretty strong here as well. And not only that, but you've got a good financial rating in general. So again, these are some names that I wanted to just point out because I think we're starting to see some of this, the environment sort of point towards some of the names. Now, the last one's a little bit more aggressive, Flowers Corp. This is your consumer discretionary specialty retailer, internet direct marketing. You can call it, it fits in a lot of boxes, but overall, looking really strong, right? And I feel maybe experts might be behind. Let's take a look at this real quick and then we're going to close out the show. But if I look at what's happening here, I've got a decent PE. That's more of a growth PE. The industry's a little weak. I'm aware of that. I'm just getting a turn on relative strength. So that's what makes this a little bit more of an aggressive trade. But if you look at experts, what are we seeing? High short interest and insider activity are really the two big negatives. And you know how people have been looking at names with high short interest lately. So that could be, again, I stress, could be a catalyst going forward. Well, that's our show here this week on Halftime with CHAIKIN Analytics. Again, I'm Pete Carmasino. Thanks again for tuning in. Really appreciate your viewership. Throw a comment on the YouTube. Well, I'll try to answer them as quickly as I can. If you want to see something else or see some different charts, let me know. But that's what we're seeing here at CHAIKIN. And that's what's happening in the current market environment today. But again, thanks for tuning in, and we'll be back next week with the same show, 1:15 here on Mondays, Halftime with CHAIKIN Analytics. Thanks again. Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.